In this week's episode of the Stock Scores Market Minutes, we're going to talk about how to know when a trend will end. As well, I'm going to do my regular weekly market analysis. We're going to do some searches for stock trading opportunities and look at the trade of the week on ACB. All right, welcome to this week's Market Minute. So, when do upward trends end? The market has been in a pretty strong upward trend since just after Christmas of last year. And it's a pertinent question to answer, and that is, when will this upward trend end? And there's some things to think about with regard to when trends typically run out of steam. Resistance is one of the most basic but important concepts in chart analysis. Now, resistance is a ceiling price at old highs. So if a market hit 2,500 in the past and it goes down to 2,100, when it gets back up to 2,500, almost every time it will stall at that price ceiling. And that's because the market has memory. Investors think about those old highs and they tend to supply stock at those prices. Now, when price rallies into resistance, when it's going up steadily and then it hits that resistance, it almost always gets stuck at that level. And it may even reverse its trend there. Breakouts through resistance are worth considering only when there is first a pause at resistance. So let's take a look at the daily chart of the S&P 500 ETF, SPY. And you can see that the market's been in a very good upward trend since December 26th. And we had some old highs back here. So that was our first important level of resistance. And look what happened when price rallied into that. It got stuck. And it got stuck. And then ultimately it broke through there. And now we're making the next leg up. Well, the more critical resistance is at the old highs, going back to September of last year. And we're within a week or two stone throw of that. We could hit it in a very big up day, or we could sort of drift higher as we have been. But once we get to that level, it's very likely that the market will stall. And that means that the market right now is risky for a reversal. Now, it may not be a big reversal. It may just be a little pullback like that. But you can almost guarantee that when it gets to that level, it's going to get stuck and at least move sideways and perhaps break the upward trend line. So that's something that we want to keep an eye out for. You can apply this concept to individual stocks, of course, as well. Just remember that when markets rally into resistance, they almost always get stuck at resistance. All right, let's do our regular weekly market analysis, starting off with the US markets. We're going to look at the S&P 500 again, but this time on a shorter term time frame, the 30-day, 60-minute chart. And you can see that we are in an upward trend. We broke through that resistance earlier this week with a big gap up. The market gapped, it stalled for only about half an hour and then ultimately a couple hours maybe, and then broke through and rallied. And so the market is drifting up on very light volume. It's not a lot of buyer enthusiasm. It's just more a lack of sellers. And as long as the bottoms are rising, we have to remain bullish in the short term. Of course, the more critical issue shows up in that longer term chart because we are rallying into that longer term resistance. And we could easily hit that next week. My thought is the market is probably speculating on some good news coming out on US-China trade. And if that happens, I expect the market will gap up and show a lot of strength, but it may very well be the old buy the rumor, sell the news type situation where if there is some good news on US-China trade, we get a pop, maybe we go up for a day or two, and then ultimately all of those people who were speculating on a trade deal have no longer a reason to hold those positions, and so they sell, and we get a bit of a reversal. So I think that's something to keep an eye out for in the weeks ahead. Looking at the Russell 2000, which is the US small caps, and they haven't really kept pace with the S&P 500 over the last little while. We have been inching higher perhaps over the last 2 weeks, but we're not breaking through that short-term resistance, and we've got a long way to go to get up to the old highs. So the small caps, which were doing quite well through January and February, they've been in a bit of a holding pattern the last 6 weeks or so. Certainly not a bad situation, but I'd like to see a little bit of excitement come back to this market. Typically in the spring, we see people speculating a bit more, and they like to speculate on the lower cap stocks. So we need to see some volume coming into this sector. On to the Canadian markets. We'll start off with the TSX 60 short-term chart. And much like the S&P chart, we are in an upward trend and therefore have to remain bullish short-term. The trend is getting into its 5th or 6th day. We broke the downward trend line back here. We've been inching higher. So I think it's risky for a pullback. Same could be said of the US market, risky for a pullback, but there's no sign of a break of trend yet, so stay long. Looking at the longer term chart of the TSX, again, we've got that long-term resistance and we're very close to it. So we could have a good start to next week, hit that resistance, and then see some selling pressure as investors take profit at that resistance level. And the TSX Venture has been headed sideways for the past few months. You can see that there is some optimism there. We know that because there are rising bottoms. But until we can break through that resistance level, not too exciting on this market. I think it's one to keep an eye on because there's lots of seasonality to the strength of the micro cap and small cap stocks. They tend to do well in the spring, just not really seeing the energy to the optimism just yet. All right, moving along to currencies. Of course, the US dollar strength has been notable over the past few months. We are knocking on resistance. Here's that theme again. And you see we hit it once, we pull back, we're hitting it again. Until we can break through, we're going to get stuck there. Now, the market is stalling at that resistance level, probably going to go sideways for another week or two, but given that the bottoms are rising, we may see a breakout soon. And the Canadian dollar has been locked in that downward trend line. We've talked about that many times. We do have a rising bottom building, and so if we could break the downward trend line, that would be a positive bottoming signal. But until we do, don't get too bullish on the Canadian dollar. Looking at interest rates, of course, we've had that spike in bonds over the past few weeks, and that meant that interest rates have gone lower. After the breakout, you typically do get a pullback, and we're in the pullback range right now. I think we could have another week or two to the downside before we try to bottom and continue higher. So very short term, don't be surprised if we see more of a pullback in bonds, which means a little tick up in interest rates. But the longer term outlook is for bonds to head up to that level of resistance, which would mean even lower interest rates. On to commodities. The gold chart, I think, is one to keep an eye on because the upward trend line is being tested at a minimum, and that's after the formation of a falling top. That's a pretty classic signal for a trend reversal. And so if we get a little bit more weakness and start to move down through that level, we went down through the week this week, but we managed to come back and close above it. But if we actually close below that level, it's likely that this market will head lower. And the oil chart, oil has been moving up on light volume. You can see we just continue to move higher. It's not that there's any great excitement in the oil market. It's probably that it was just too oversold and we're bouncing back. Now, 50% of that move, roughly, I've drawn it right, maybe a little bit lower. We're kind of hitting that, so we're at a critical point where we could see a little bit of a reversal, but there's no sign of it yet, just something to watch for. Look for the market to close below the open on a weekly chart as a signal that maybe we're going to pull back a little bit in oil. Again, right now I got to remain bullish in the short term because we are moving up. And finally, the fear chart is at very low levels, and that worries me a little bit because it shows complacency. And as we're rallying into that resistance level, if we do get a reversal, you're going to see a spike in the VXXB, and that will make it something very tradable, so keep an eye on that. So my ratings then, neutral long-term on US stocks simply because we are rallying into that long-term resistance, but bullish short-term, we are in an upward trend, perhaps a little bit overbought, but still in an upward trend. Canadian stocks, neutral long-term, bullish short-term. Gold, neutral long-term, bearish short-term. My long-term rating could go to bearish if we get a break of that upward trend line on the weekly. And oil, bullish on both time frames. Investors appear to be buying in anticipation of good news, perhaps on US-China trade or perhaps earnings, which are going to start rolling out next week. However, the market is moving up into strong resistance where we should expect the momentum to stall. Fear is low, but this could reverse soon. Watch that fear chart. Gold is at the risk of a breakdown of its upward trend line, and oil is strong, albeit on fairly unenthusiastic volume. All right, so let's take a look at the stocks to watch section. We're going to go over to the Stock Scores Market Scan. Now, the past week was very low volume on the markets, typical for the end of the quarter, nothing to really be too concerned about because it does happen when there's no news flow on earnings. However, what that means is when I would normally run the abnormal break scan, a lot of stocks won't get picked up even if they have good chart patterns. And so there's another option if you're looking for those stocks making action candles, and that is the morning mover scan. It is a less stringent version of the abnormal breaks. And so I'm going to run that on the Canadian market, and let's see if there's any good chart patterns that show themselves. So we'll run this in the gallery chart viewer, and I'm just going to cycle through charts, and I'll stop if I see something worth talking about. What we're really looking for are abnormal breaks from low price volatility. Here's one that looks pretty good. This is Cardinal Energy, and you can see we've got optimism with some rising bottoms. We actually broke through some resistance about a month ago, maybe 3 weeks ago, and now we're starting to tickle through that resistance again. A little bit of a jump in volume, not real strong, but notice also that the stock scores have gone above 60, and that is a positive sign for a longer term turnaround of this stock. I would rate it a 7 out of 10. Moving along, don't really like that. Precision Drilling, I think one to keep an eye on. This stock is building optimism toward resistance. You can see we're right at resistance, and if it can break through with some volume through that 350 level, it closed at 348 on Friday. If it can get some movement up through 350, I think it's worth considering. That resistance goes all the way back to November, so it's a pretty important number. Keep an eye on this stock next week. Calfrac Well Services, another oil service company. Again, there's resistance. We've got, this is called a rectangle pattern, where you can see it oscillating in that pattern, but longer term we do have optimism. We had a breakout here, that was a positive. Now we're getting another little breakout. Volume good, but not great, but still a chart that's worth considering. I'd give this a 7 out of 10 as well. Torque Oil and Gas, not quite there yet. This is one to watch. It's got resistance here. I would hope that it will go sideways under resistance for a few days and then try to break out through it. If so, it will be worth considering. And I think that may be it. Oh no, we got a couple more here. Whitecap Resources. So we're seeing a lot of energy names, of course, with oil doing well. You would think that these stocks would have kept up with oil, but they really haven't. And now perhaps money's starting to realize that oil is respectable again, and we should look for buying opportunities in the energy companies. There is a little bit more volume than average, but not a lot. But a price move that's trying to get through this resistance. Historical yield is pretty good, 6.75%. I don't know if that's a safe yield, whether the company might lower it, but still historically a very strong yield, and starting to break from optimism. Another one to keep an eye on if you think the energy names are on a turnaround. And just about done here. We'll go through every one. Chorus was one I talked about, was it last week? It's done well this week. Cenovus, not quite as clean of a chart. We have here that ascending triangle with a breakout, but we've got some resistance here, and that limits the upside, so I'd give that one a 6. And the Stars Group, TSGI, if it can break through 25.50-ish, then it's worth considering, but again, it needs some volume. That's one to keep an eye on. CNQ, another energy name, very similar chart to many of the stocks that we've looked at. You can see that long-term resistance right about there, trying to get through it. Volume was pretty light, so again, we don't have that commitment by buyers with some volume coming in, but this is another example of a stock drifting higher. This one pays a yield, 3.7%, and to me looks more likely to go higher than lower. All right, so let's get back to our presentation and look at the trade of the week. And this week I'm actually going to show you a loser. This is a stock that I traded today. It made a pretty big gap up on the open. I don't like big gaps, but I bought it anyway. Perhaps that was foolish. I like the really strong volume on the open. I like the strong price action on the open. But really my buy point, which was at the close of the action candle, was the high point of the day. It drifted lower, and then it ended up going sideways. So for $100 of risk, it was 900 shares. That meant $8,361 of capital to take the trade, but with margin, it would take $2,800 of capital. And it ended up with a minus 1.2 RR. That should have a little minus sign there. I'm trying to draw it for you, but my screen keeps messing up. Anyway, this should be a negative 1.2 RR. You see the negative return of 4.3%. Just want to demonstrate that sometimes the trades don't work. This was my, first loser of the day. It just never went anywhere from the time I entered it. But I also didn't panic. I stuck with the trade. Once it was pulling back, I felt like it wasn't going to go a whole lot lower. Ended up still closing negative, but not a terrible trade. And the key with trading is to not take big losses. And this was a relatively small loss in risk-reward terms, of minus 1.2, not a big deal. Well, that has been the Stock Scores Market Minutes for, April 8th? I don't even know. Have a great week in the market. Trade well. Subscribe to the channel. Hit the like button. And, remember, we've got upcoming events. So go to the Stock Scores website. There's a bunch of webinars, some live events. Take a look at those, and hopefully I'll see you out at some of those events coming up in the next couple of weeks. Have a great week in the market. Trade well.